Hello and welcome to Crux Investor. We caught up early today with Farhad Abazov, CEO of Millennial Lithium. We talk about achievements in 2020, plans for 2021, including financing and the pilot plant. If you want our thoughts on the conversation, its plans for next year and the company itself, you can find that at cruxinvestor.com/club, where you can also find detailed company reports. There's analysis from individuals from around the world on a variety of companies and commodities. There are summaries of other interviews that we've done just to save you a little bit of time. There are training videos to help you with your analysis and diligence. And of course, there's a thriving community of investors sharing their thoughts and ideas with each other in a nice, safe environment. So go and join them at cruxinvestor.com/club. Of course, we love your feedback too. So do give us a like and remember to leave some comments below to let us know what you thought. And if you want to see what we talked about, take a look in the description below. Farhad, how you doing, sir?
Good, Matt. How you doing?
Not too bad. You coping? You ready, getting excited for this holiday period we're about to enter into?
Yeah, as much as we can. Yes. Yeah. It's been an interesting year to say the least, but yes, for sure we're getting excited.
Tell me about it.
Both about the break and the next year.
Good. Okay, well, that's why we wanted to kind of catch up with you. Talk about this year, review of 2020 and looking forward to 2021. Before we do that, give everyone who's new to this story that 1 minute overview of what your business is first, though.
Of course, Matt. So Millennial Lithium is a lithium brine developer. We have a project in Salta province of Argentina. And at this point, we're one of the most advanced lithium brine projects in that part of the world, with the feasibility study completed, with environmental permits in place. And we're also running our pilot operations right now as we speak. The company itself is listed on the Toronto Stock Exchange Venture. But we trade obviously both in Toronto, and also we trade in New York. We trade in Germany quite a bit. But at this point, I can obviously talk about what we've done in 2020, and then perhaps Matt will chat a little bit about our plans going forward. And there've been quite a few interesting developments in the industry as well.
Well, let's start with that. Actually, just going to set the scene in terms of the macro. Obviously, I think lithium's profile has picked up in the last 3-4 months. People are starting to notice it, especially after the Piedmont deal with Tesla, etc. So I think people are looking at. So what's your take on it? Because I look at your share price, you've doubled in the last month. I mean, fantastic. People are paying attention to you. You're significantly advanced, so I suppose they should do. But your view on the macro?
Yeah, man, look, quite a few things have changed. First of all, I think the decline of lithium price itself has probably come to an end, hopefully. And we've seen some stability in that respect. So the price now is about $6,700 per ton, maybe around $7,000 depending on the market. So much better than what we witnessed in the last, 12, 18 months. So that's, I think, a major, I would say, new event or major milestone, so to speak. In terms of fundamentals, we've reached a point where a lot of hard rock producers are hurting quite a bit because of this lower lithium price. So quite a bit of production has been curtailed or has been put on back burner, or perhaps even canceled altogether. A lot of new development projects have been either canceled or rescheduled or delayed. So all of these, I think, factors have contributed to more stability in the price. Demand has been the same, and I'll come to demand in a second. But just sticking with with the supply side of the story. We've seen quite a few interesting stories in the last, I would say, few weeks. You mentioned Tesla's offtake with an American developer, of course, but also there's been an interesting development in your home country in Australia with the sale of Tianqi's shares to IGO. Major development because Tianqi obviously has been under quite a bit of financial pressure because of their investment in SQM, which was leveraged. So they had to do something to, bring some stability to their balance sheet. So they had to do this thing. But it also tells us that there is a renewed interest in the sector from other major players, both mining players and, of course, players within, wider battery chain itself. And that's very positive. And we've seen that, in addition to these kind of entries into or new entrants into the market or into the sector, the supply in general has been constrained. If you look at South America, major producers there, Albemarle and SQM, for example, they've announced obviously large expansions, but now they've calibrated or moderated their plans. So we can see that They're not going to jump from 60,000 tons of production per year to 180. It's going to go to 70 first, and then eventually it's going to go to 120. I'm talking about SQM right now. And with Albemarle, they're still struggling with certain challenges in South America and Chile. They've also canceled or actually delayed some of their projects in Australia as well. So I think this is all very positive. Now, in terms of supply, the excess supply, I should say, that is in the market, that is also being absorbed as we speak, as the markets open up worldwide. Again, as I think I told the last time, I don't believe that's going to be gone completely until probably the middle of next year, maybe even the second half of the next year. But the process has already started. If you look at the numbers, there's a lot more sales of EVs now worldwide as well. Led by China, but also the pretty good sales in Western Europe. And we see a lot more also effort on the part of the industry players to affect or to lobby governments worldwide. Now, again, if you look at, for example, UK, that there are already plans to go completely, EV, 100% EV, I should say, by 2030. Now, in the US, there's been an industry effort. They set up an organization called ZETA, I think the Zero Emission Trading Association, something of that sort of transportation association, and major players from within the industry chain, including Tesla, Albemarle, et cetera. They're all part of that effort or that initiative. And the idea is to lobby the US government to make sure they also go 100% EV by 2035, if I'm not mistaken. The similar efforts are taking place at state levels as well in California and some other US states. So I think eventually, obviously, we'll see the results of this. We'll see the impact of all these efforts. In China, specifically, the demand for cars, for EVs has gone up. The sales have gone up over 100%. And if you look at the situation in Western Europe, it's quite similar picture. So I think the demand picture is coming back to normal. Normal obviously is a very relative term in this situation with COVID lockdown, COVID restrictions and shutdowns. But we think that next year we'll see a lot better environment in EVs. And again, even at the limited data that we get from car sales in general, we see that EVs are doing much better. And if you look at the deployment of lithium-ion batteries in general, not only in electric vehicles, but in other applications, they're up dramatically. They're up by almost 25% worldwide, led by Europe, which is up by over 100%. So these are all very positive signs. And I think that's the result of all these, I would say, of the confluence of all these factors led to a spike in some stock prices, specifically in development lithium companies, as well as producers too. I mean, obviously producers are much larger companies, so they didn't see, 80, 100%, increase in their stock prices, but the companies like Millennial have seen that, and some other companies as well. So I think that's all part of it. But at the same time, if you pay attention to the details of all these companies, if you really look at the structure, at the stage of development, you will see that actually these were the companies that have grown most or have gone up most were the companies that were most advanced, the companies that were either already at a stage where they're ready to go into pre-construction stage, or the companies that have already started construction, one or another at a stage where they have a much better chance of getting into production eventually. It wasn't really, I would say smaller or less developed, or burgeoning lithium companies that have seen their stock price rise in the last couple of months.
Yeah, it's been a really interesting environment. I think with COVID, it's been an enabler actually, because you've seen a lot of governments bring forward timelines for zero carbon emissions. They've brought forward the carbon credits type initiatives. So it's been an interesting environment for sure for all the kind of battery metals, and not least of all lithium, obviously. Now you mentioned obviously that you get a higher leverage with some of the juniors, the earlier stage people, but you also you don't necessarily always get the certainty around will they get into production there. You are positioning yourself as the most advanced lithium near-term producer globally, I believe. Certainly when we've talked in the past. How are things going? I mean, in the context of what's been happening in 2020, the two outstanding factors for me were obviously the pilot plant and obviously getting that commission, which has happened now, and two, conversations around financing. What can you tell us?
Yeah, so Matt, maybe we'll start with kind of an overview of what we've done in 2020, since we're approaching the Christmas season, and it's important to kind of go over all of those achievements and milestones we've attained throughout the year. Look, in the first quarter, we did a major thing. We basically consolidated our land position in Pastos Grandes Solar in Salta. And, the seeds of this consolidation obviously were sown much earlier, about 18 months before that. We had won a tender with the government of Salta, whereas, we had committed to a certain work program as well as payments to the government, et cetera. So we had completed all that before we actually managed to transfer 4 titles to Millennial, thus consolidating our foothold in this area. Now we're the largest operator in Pastos Grandes. And that is very important because, as you know, we're dealing with brines. So sometimes there are questions as to how you're going to allocate brines, how you're going to actually manage multiple operators in one solar. So it was very important for us 2 years ago, obviously very critical now, to consolidate and to actually have a dominant position in this solar, which we achieved, as I said, in the first quarter of this year. And then last year we had applied for the approval of our environmental impact assessment report before, obviously, we got the approval this year. This was this summer. That was a major milestone, not only because of the importance of environmental permits, but also because it was in the middle of COVID. And as you obviously know this, but as some of our viewers might have heard or might have read, Argentina got hit by COVID really hard, and they're doing better now, but still they're struggling. So despite all of these difficulties, the province of Salta, the provincial government actually, which was also a new government, in other words, it was not the same officials who were dealing with this portfolio, with this file beforehand. I mean, they got elected late last year, so they got into the office and they started the process. They caught up with the entire review process pretty quickly. And despite, as I said, all of these COVID complications, they still approved it and issued the approval to us this summer, which was another very important milestone on the development timeline. So those were two major things before we actually decided to commission the pilot plant early this fall. And that's also very important, Matt, because what we're trying to do there is to basically, prove obviously that the whole process works, that we can actually produce lithium carbonate of battery grade using this flow sheet that we have shown in the feasibility study. Again, this is what we call traditional approach to both extraction and, of course, processing of lithium carbonate using evaporation ponds. But also that will allow us to actually to get this product qualified by third parties, meaning sending this to off-takers or potential off-takers, as well as to actually a third party, which is basically a research institute that will do the analysis on our brine, on our product, I should say, and qualify it as battery grade material. So that's very important for us because that will also determine the route that we will take in terms of selection of our off-taker and, of course, financing and so forth. So all of this has been happening this year. Again, despite all of these issues, we have a few advantages that some other companies do not have. That is, although we're a development company and a lot of development companies fly in and out their people, special technical personnel to run their business, run their project. In our case, almost all of our key technical guys actually reside in Salta province and Salta city. So it was much easier for us to continue our operations without any major disruption and even without any disruption of supplies. So that was very important. That allowed us actually to operate throughout the year, despite, as again, the COVID issues. Now, going forward, obviously, we have significant work ahead of us, Matt, and that is primarily financing. The plan right now on the technical side is basically finish the first stage of these operations, meaning actually produce the first batch of lithium carbonate of battery grade in the first quarter of next year. And then the entire process works seamlessly. Then we basically ramp it up to 3 tons per month. Again, that's the nameplate capacity of the plant. And we'll keep obviously operating that plant regardless of our production plans going forward, because it's not just a pilot plant; it's also a training plant. So we'll use it for various reasons, for various purposes there. Now, on the financing side, the focus has been basically trying to bring in capital from two major sources. One is from strategics, meaning these are large industrial players from both within the battery chain and outside, and also bringing in an off-taker or a couple of off-takers. Again, for our viewers, just to remind, our plan is to produce 24,000 tons of battery material lithium carbonate and battery-grade lithium carbonate, and we want to have at least a couple of off-takers there for diversification, obviously for risk mitigation purposes, and also because at least the current off-takers, potential off-takers we're talking to, they can also bring substantial capital to the table. And that's very important for us, obviously, because we're at the stage where we are cobbling together financing package so that we can actually start construction next year as soon as possible. So right now, we're quite advanced actually with both, I would say, strategic side of it, strategic financiers and with off-takers. And obviously they go hand in hand, Matt. We're probably more advanced with off-takers. We're ready to sign all the agreements, et cetera, but at the same time, want to make sure that we understand who exactly is coming in on the strategic side, and because they have to obviously feel comfortable with off-take agreement that we're going to be signing. That's one. Secondly, depending on what kind of strategic financier we use or partner we use, they may or may not need an off-taker or an off-take agreement in general, because they may end up being actually an end user, so they may want to take the entire production themselves. So that's why it's kind of a chicken or egg situation, but at the same time, we're fully cognizant of the fact that we have to keep pushing both of these initiatives forward on parallel tracks simultaneously. So the plan is still the same as we discussed last time. By basically in the first quarter of this year, we're going to have clarity on the strategic partner or strategic financier, and that will determine two things. One, whether we need an off-taker or not. And obviously, if we do, then the terms, whether the terms that we've negotiated so far are acceptable to this new party. And the second thing is what kind of technology, what kind of technical approach we're going to be employing going forward. Because right now we've been using evaporation pond route, and that's what we've been using so far in terms of our pilot operations. That's what the feasibility study is based on. And one of these parties that we've been talking to is actually keen on that particular methodology with a little bit of an adjustment. They have a little bit better approach, perhaps more efficient approach at the processing plant level, so that there could be some addition there or some change there. Not significant, but significant enough to make an impact, especially on the optimization side of certain components. But if we go with a potentially different strategic partner, they have a little bit, quite different approach to this altogether. They want to use some type of direct extraction technology and so forth. It has its own, obviously, pros and cons. As I said, we're quite comfortable with the evaporation route. Yes, it has its own kinks to be ironed out during the process, during the pilot operations, but at the same time, it's a well-known process. So we're kind of facing an interesting challenge here, Matt, that it's not just a financing that we're trying to put together, but it's also technological approach or technology that is attached to this financing package that will come inevitably with the selection of this or the other partner.
Right. So thanks for that. And Q1, you're producing battery grade lithium carbonate to give to your partners? I mean, they've obviously done some testing, but is it under sort of lab conditions, or is it theoretical based on the flow sheet? I mean, how advanced is their testing?
Yeah, the interesting lab, this is not really for strategic partners, Matt. The pilot operations that we've been conducting, and obviously the processing plant that we just commissioned, it's primarily for off-takers. Okay. For a third-party qualification, this is just for sale. If we go forward, we want to make sure that the design that we put together works without any issues. The strategic partners already have their own pilot operations or pilot plants in their respective countries. So they've received our brines and they've run it through it, and it actually works pretty well with their approach.
Okay, so you've got two different approaches. One was slightly more conventional with maybe a more optimized end processing, but the DLE, the direct lithium extraction component, that's it's fairly early days across the board in that. Would that delay things if you went for them, and they'd have to present a much better offer presumably for you to consider?
Look, on paper it looks a lot more attractive. I'm not talking about financial side of it. I'm talking from a purely technical perspective, because you don't need evaporation ponds. So theoretically, obviously, you don't have to spend time, not only time and money, not only building evaporation ponds, but most importantly, you don't have to wait for 18 months for the evaporation to actually take place, so that you can, bake your lithium to a certain grade, so to speak. So you basically forego all of that, and you literally, as the name implies, you start, pumping your brine through this plant, right? However, as you also rightly noted, there are quite a few competing or similar, I would say, extraction or direct extraction technologies out there, and none of them have been proven at a large scale. So this one has been proven on a decent scale, I would say, not again on a large scale, not producing thousands of tons of lithium, but on a decent scale, I would say, on a reasonable scale. So we feel a little bit more comfortable with it. Having said that, it's still not as proven as the evaporation approach. So we obviously have our own questions. So coming back to a question as to whether this would delay things, I think it will delay things for sure, because it will be very disingenuous on my part to say that if we go with that, our timeline will remain the same. Most likely it will not, because we'll probably need to build a much larger pilot plant just for that, run it through it just to make sure that it actually works on site and everything else. And then probably do even, quick feasibility study just based on that. And so it will change the profile of the project quite a bit. So obviously that raises a lot of questions for myself personally, and of course for the board. So that's why technically speaking, we feel much more comfortable with evaporation approach, again, with certain optimization elements added to it. So at this stage, the financing structure offered by the other party has to be superior, like far superior, for us to actually go with that, because we know that there will be inevitable delays on that path.
There's delays and technical risks, and
yes,
may jeopardize things. So I can understand the conundrum there for you, especially when you talk the language of an FID at some point in 2021, ideally.
Yeah, that's a point, Matt. We really want to stick with our original timelines, which is basically wrap up the strategic finance year by the end of the first quarter, get offtake done if that's what is needed at that point, and then start construction right away, meaning the second quarter of next year, and that will put us in production in the second half of 2023. So that's our plan. If we go with a little bit different or dramatically different technical approach, that will obviously lead to significant changes to our timelines.
So it's nice to have competitive tension, but you've got to risk assess it.
In the end, we're talking about probably in terms of timelines, a timetable of the difference of about 6 to 8 months. But if we can, as I said, if we can get a fantastic offer on that new approach, then of course we might opt for that.
Okay, so you've pretty much laid out for us there 2021 your objectives, so that's well understood. You're capitalized to do that, aren't you?
Yeah, we're in a very good shape, Matt. We got about $6.5 million in the bank, so our cash burn has come down dramatically in the last few months, primarily because we finished all the programs. So the only thing that we're running is a pilot operations. It doesn't take a lot of money to do that. It's roughly about $100,000 a month, to run the plant. And overall annual cash burn is about $5 million a year. So on the current treasury, we can probably run this company for 3 years without actually going back to the market trying to raise any capital. So I think in that regard, we're in a very strong position. So all our focus has been on not raising any short-term capital, so to speak, but really construction funding or whatever financing that we might raise, that will all be earmarked for construction.
Fantastic. Well, look, it sounds like you've had a good year. Sounds like some big moments, some big decisions to be made by you Q1, Q2 next year. So look, stay in touch. Let us know how you get on. Very keen in this environment to see how you do.
Yeah, Matt, thanks. I think it's been a very good year, despite all the challenges that we all faced, regardless of what industry we're in. But 2021 will be a critical year for us. And I think it's actually a good time for us also to make that decision, because I think we also turning the corner in the industry. So we think the first half of the next year will be very important for us, and hopefully we'll come up with very good news for our shareholders as well.
Beautiful. Farhad, thanks very much. Have a wonderful Christmas. We'll speak to you in the new year.
You too, Matt. Thank you very much. Good seeing you.